If you can master SDL on gold, you will be able to make so much more money from trading. By the end of this course, you will be able to learn everything you need to know about trading supply and demand with liquidity. If you really want this strategy to work for you, please do not skip through the video, because this will save you years of learning and thousands of dollars in mistakes. I'm Mikkjo, the owner of Mikkjo Trading and the founder of the SDL strategy. I have personally been trading this strategy for the last 2 years on gold and have perfected it and teach it to hundreds of my students in my community. Last week, one of my students got funded 200k with only 3 trades using this strategy. I'm gonna start off by explaining you what the SDL strategy is, why you should trade it, the specific rules on how to draw the zones, where to draw the zones, different entries and the risk management on this strategy, how to avoid traps so you can improve your win rate, and last but not least, how to get an edge with this strategy. I'm gonna explain this at the end of the video, so stick around. The first thing I'm gonna do is give you a simple explanation on this strategy. It's called SDL because it's supply and demand with liquidity. These are supply and demand zones, often at the lows and the highs of the market. But it's also liquidity at the lows and the highs of the market. And when price takes out this, it takes out our stop losses and the new sell limits and stuff like that. So it frees up a lot of orders, and banks and institutions use these to push the price they want. So the market can't just move by itself, it needs more liquidity. That's why I don't trade zones when it's not liquidity above. There's no liquidity here. So I would not take this zone, I would only trade this one. And it's because price often comes down like this and reacts a little bit, but it then goes down and takes out all this liquidity. And now banks and institutions have so much orders and volume that they can push the price the way they want from the next zone. So they can choose to push it down, you never know. But what you need to do is look at the reaction. If the reaction is very good, you know you're at the right side of the momentum. So you just enter here when it closes very bullish, and then you can ride it to the top. So it's very easy because you can have a very small stop loss, because this is often the new low. So the price is not coming back down again, because they are buying a lot here. So it's no reason to push the price more down. They have the liquidity they need. So you just enter here and ride the momentum. In this example, you can see exactly the same. You have a normal supply and demand zone here, and a lot of traders got in here, but price didn't move so much, it just a little bit, and then it went down and went through the zone again and it hit this zone. It's because you can see the liquidity here. It takes out the liquidity and have a huge reaction. So the smart money, they don't want to buy here, but a lot of retailers buy here, have the stop losses under here, but as soon as price takes out, it reacts very good, and you can see the momentum it made. Under me now, you can see the checklist and the rulebook I'm using for this strategy. This strategy works on multiple pairs and time frames, probably, but I have only used it on gold on the 5-minute chart. That's the only one I have backtested, and I know that works. I do not follow any trend, and I only trade London and New York session. I really like gold because it has a lot of volume, and when you add a 5-minute supply and demand zones every time, you get a lot of opportunities to get trades. The next 3 rules is about the zones. The first rule is it has to be untapped. This means that price cannot come up here, tap the zone and go back, then it's just a normal supply and demand zone. So unless it's part of the move down, so imagine if this wick tapped the zone like this is okay because it's the same color and it's part of the move down. But if this one was green, it would not be okay, because then it's invalid the zone and you will not get the reaction you want later. The zone is always drawn from the last candle before the aggressive move, so in this case the green one. As you can see, I draw it from the body of the candle and not the wick. This is because the next black candle is shorter than this green one, so if this one went past, then you can draw the zone like this. But if this black one is shorter, you have to draw it like this, because if you have it on the wick, you can see it's tapped here. So imagine if you enter here because you think this is a valid zone, but it's not, because then you get stopped out, because the smart money, they are targeting this zone. This is where they are entering their cells. So here you get faked out, and here is the real entry. So this happens a lot, so you need to be sure that your zones are accurate. The last zone rule is that the zone can be max 24 hours old. If it's over this, the zone loses a lot of strength and you would probably not get the reaction you want. This next rule is probably the most obvious, but the most important. You need liquidity close to the zone, or it's just a normal supply and demand zone. So a lot of stop losses here when the move went down again, and you would just want to take it out, wait for smart money to push the price down again, and just jump on the train. Next checkpoint, liquidity has to take out its own high or low. So in this case, its own low. So this is the low of the liquidity, and price comes down and takes it out. This signals that the price is gonna continue down, because this is a break of structure and usually happens when price is continuing down. So we are just waiting for price to take out liquidity before pushing even more down. The last liquidity rule is that it needs to be at least 2 candles. So this is not liquidity and this is not liquidity, because it's only 1 candle. 1 candle liquidity may work, but it's very weak. So at least 2 to get the reaction you want. So that's why this is very good, because it's 5 here. So it's very good liquidity. The next step is simply to wait for price to hit the zone. It just has to tap the zone and then close outside. If it's closed inside, this shows that the zone is probably not strong enough and it won't respect it. As you can see on the chart now, this candle closed outside of the zone, which signals that the smart money are starting to sell. So this is when you get confirmation that you are at the right side of the momentum. The standard entry is pretty simple. You just enter at the close of the candle that taps the zone and put the stop loss right above like this. And then you target a 1 to 3 and a 1 to 6. Like this. Sometimes I enter before the candle close, so if this candle taps the zone and then goes past where it opens, it turns black, and then I enter as soon as it turns black, because if I don't, I may get an entry down here and then I got a huge stop loss and a very bad risk to reward. So I just enter on the flip. Most likely it won't get up and close inside the zone. There is some traps you have to be aware of. So in this case, you can see at the time it's 5 minutes before a new higher time frame candle is opening. When this is happening, you want to wait for the next candle and see how it reacts, because new high time frame candles opens up with a lot of volume and often retest the zone that you are trading from. So if you would have entered here because this reaction is good, you would have get stopped out by this candle. So you want to wait and see how the next candle reacts. And as soon as this flips, you can do the flip entry and entry at the flip, and then target a 1 to 6 and a 1 to 3. The last entry model is called a double liquidity entry. This is when you have a key resistance line close or inside your zone. What usually happens is price reacts from the zone and normal people enter here. But since we have a key resistance line here, you can anticipate that smart money also wants to take out these stop losses under here as well. So this is what usually happens. It takes it out and then it reacts very good. You want to enter from this close instead of this one. If you enter here, you would be stopped out. So always when it's a trend line or a resistance line, wait, be patient, and entry when you know that all the liquidity is taken. So now you can see that price reacts very good from this area. The standard risk for reward for this strategy is 1 to 3, where you risk 1% of each trade, and this means when you win 3%. So this is pretty standard, it often hits. It's a very good win rate on this one. If there's potential, I do a second trade where I do TP2 as well, and then I target 1 to 6, but I only use 0.5% risk. So this will not happen as often, but you win 3%, so the risk is often worth it because you get a so good reward. And the last entry is where you get a very late entry. So let's say you get an entry here, then I would only target a 1 to 2. A lot of the move has already happened, so I wouldn't target more than 1 to 2 because this is basically a 1 to 6 if you have the better entry. So you can't expect price to go past these even more every time. I just want to say that I never move my stop loss to break even. It's multiple reasons for this, but the main one is that you can't do this in backtesting because it's not live trading. So I don't do it when I live trade as well. This strategy has a very good win rate and I win more than my losses, so just trust that the trade is gonna work every time, and if it's not, it's okay. I also want to remove the human part of trading, like all my emotions. I don't have a choice, I just accept it. But if I let myself have a choice, I could be greedy or have fear, so I don't want that to affect my trading at all. Now let's move on to how to keep an edge with this strategy. In theory, it should be very easy, but we all know that to become a profitable trader, you need more than just a profitable strategy. Since we are taking trades with a 1-3 and 1-6 risk-reward ratio, we only need 30% win rate to become profitable every month. This strategy has a much higher win rate than that, so from the backtesting, which means it's very profitable, and the only thing that can ruin it is yourself and the actions you do every day. Now that you have all the technical side under control, now you need to understand what you need to do to get the most out of it. The first thing I would do is backtesting. I have personally backtested and live traded this strategy for the past 2 years now, and with that comes experience and a confidence to execute on a high level. It's all muscle memory to me now. I can do it without thinking. You need to do the same to understand every single detail and practice every scenario, so you are able to trade the market with full confidence that it will work out even if you take 7 losses in a row. I would also recommend to journal every trade you take. Once I started doing this, I realized how blind I have been before. I could suddenly see an overview of all my trades and easily adjust some small details I wouldn't have noticed if I didn't have all the data in front of me at the same time. The cool thing is that you can't lie to yourself. The journal will call you out, and if you take setups you shouldn't take, you're gonna see that trade for the rest of your life and never do it again. You have to treat trading like it's a business, because it is. This is a long-term game and you need consistency every week to get the best results. How you do one thing is how you do everything. So you want to have a routine on your trading, but also in your day-to-day life. Trading is harder on your psychology than every daily task is. If you can't be consistent in your life, how could you be consistent with trading? The last thing I want to say is to consistently try to improve your mindset and knowledge about trading. The second you think you know everything is when you start losing and falling behind. It's impossible to stay at the same position for the rest of your life. You're either growing or you're dying. Find out what mindset and tricks the successful traders has and make a plan on how you can achieve the same. Accept that they are better than you and just relax your ego. Do whatever it takes to make yourself become the best version of yourself. If you want to learn more for free about this strategy and trade with me and my community, check out the link in bio to my free Discord server.